Okay, so hello to you all. Today I would like to present a new update which I have been working on the one tool to rule them all. In this case, the biggest addition is that the same like with calculus, now we are going to be able to use the multiple time frame approach for the calculations. So we can see that, for example, if we are going to go right now on the chart, we can use the time frame of the chart, or we can use 4 hours, or you can use a daily time frame. And you can use that. In this case, you know, the signals are going to be much different. But yeah, in this case, for example, we can use 4 hours. I recommend in general to use splits of 4, you know, so like 4 and 8, like for example 1 hour with 4 hours, 15 minutes with 1 hour, 1 hour 5 minutes, 5 minutes 15, maybe even 30 as well. So yeah, this would be one way to use it. Like for example, we can go in 15 minutes, and in this case, for example, I would use 1 hour. So we can use 1 hour, and we can see right now we are going to plot on the chart the 1 hour signals. We can keep continue, you know, with 15 minutes as well, if we guys want. At the same time, we can go with even smaller ones, although it's not so much recommended. Like for example, use the 5 minutes. Or 10 minutes, you know, we can see we are going to have much more signals, 10 minutes as well. So yeah, you can see it's a new addition, but in general I recommend to use a bigger time frame than the one that you are using on the chart. So if you are, for example, with 15 minutes, we are going to go with 30. You can see that, look at this difference. So we have a very nice short, we have some discontinuity here, a very nice long, a very nice short, some fuck up here, and then again very nice long and a very nice short. Like for example, if we are going to use instead a chart, you can see that we will have this long, the nice short here. We are going to have much more divergence around, so, and fake entries. Yeah, we will have this long, then for example we will lose to this sell, then again another nice long, the good short. Here as well we will have the same two losses. But yeah, you can see that by using the 30 minutes in this case, the signals is much more smoother, and we clean up a lot of that noise. So this is the first part and the first addition with the strategy. At the same time, you can see that here we are going to have MTF rating 1 and MTF rating 2. In this case, these ratings, we are going to plot them here in the table. So what is it telling us? We have three types of calculation of the rating. If you want, you can use the multiple average, but in this case you are going to see that the multiple average is much more aggressive. We are going to have much more entries than we will have never in general. And in this case it's telling me that I'm looking at 55% of the moving averages to go long, or 60% of the moving averages that's telling me to go short. However, if you go all, in this case I'm going to look at 55% of both moving averages and the oscillators. So it's going to be much more smoother and more accurate, you know, overall. It's the same procedure that I'm using in general with the calculus as well. So in this case, this initial chart rating percentage all here, this one is based on this function, on the rating based on all, both multiple averages and the oscillators. And at the same time, the plots that we have here are going to be the plots from the chart. So in this case, for example, if we are going to use 30 minutes, it's going to take 30 minutes. If I'm going to use the chart, it's going to, you can see, it's going to take 40. So these values from here are designated with like 1, 2, and yeah. But in this case, let's go, for example, with 30 minutes. Then, for example, we can go 1 hour and 4 hours. So in this case, we have on the first row, we are going to have the percentage of all our indicators telling us to go either long or short. In this case, we can see that 37% of both oscillators and moving averages are telling us to go short. On the 1 hour, 35%, and on 4 hours, 20% of them. While at the same time, if we are going to take a look into only moving averages, we can see that 93% of all the moving averages are telling us to go short, 80% of the moving averages on the 1 hour is telling us to go short, and 66% of the moving averages on the 4 hours is telling us to go short. I didn't apply the oscillators as well, but yeah, maybe in the future I can add this part as well. But I do believe that either the moving averages or the moving average with the oscillators are kind of like the best tools to look into. The oscillators, not so much, because it's a little bit slower. And then everything else, I have also added, this new function is going to tell us the volatility of the current percentile, where we are at the moment. So in general, this one is better to be used, like for example, we're using a big time frame. So let's take, for example, we are going to use the chart. So in this case, if we are going to use the chart, it's going to tell us, the current volatility of the chart. So in general, movement below 50 is going to tell us that more or less the volatility is stable, to say like this. The closer we are to 20, 30, I would say it's kind of one of the safest points. I would say below that, you can be prone to reversal. And at the same time, on the upper side, is telling us, that once we are going to be around 70 to 80, you can expect very, very, very big movements happening. Like for example, if we're going to go in 1 hour, you can see that right now, for example, we are in the 86 percentile. So if you can notice, the ATR right now, it's much more volatile than it been in the past ways. So look, for example, right now the ATR it's around 190. So it means that BTC is moving almost 1% each 1 hour, compared to, like for example, if you are going to take a look into the so like for example, if I'm going to go here, not this way. I wanted so we can see that currently we are moving 190, which is more or less, I would say 0.8, 0.9% movement in 1 hour. But if we are going to take in comparison the movement for the entire year, because you can see here that we have the calculation for the bull and the bear candles, which is going to be represented here, we can see that it's almost double than what we have, for this year. So that's why the volatility is very strong right now. So we are going to be expecting bigger movements. So yeah, this can help. I believe, a lot. So yeah, I would say these are the new biggest changes. I have already included, like once you go, for example, in the indicators invite only, in the one tool to rule them all, it's already going to appear like the fourth version, the version 4. So yeah, thank you all for watching, and as always, if you have any questions, please let me know. See you next time. Bye bye.